I'm often asked what tools I use to analyze the market. Many people expect to hear a long list of indicators, complex formulas, or some secret methods that allow me to see the market better than others. To be honest, a few years ago, I would have given exactly that answer myself. Back then, it seemed to me that the more tools I had in front of me, the higher the chance of finding the perfect entry point. But experience has gradually put everything into perspective. Today, my trading chart looks much simpler than it used to. It doesn't feature dozens of indicators, multicolored lines, or complex patterns. The main tool I use every day is the price itself. It is the price action, its reaction to key levels, and the behavior of market participants that give me far more information than any additional signals. Of course, it would be wrong to completely abandon auxiliary tools. I regularly mark support and resistance levels, analyze trading volumes, assess the overall market structure, and always pay attention to higher timeframes. Very often, it is precisely this broader perspective that helps me understand where the price currently stands in relation to the longer-term picture. Another essential tool for me is the economic calendar. Even if I don't intend to trade directly on the news, it's important for me to understand which events might affect volatility. Sometimes, a single report can completely shift market sentiment, and this needs to be taken into account in advance. A trading journal plays an equally important role. I would say this is one of the most underrated tools. After every trade, I note down my reasons for entering the position, my expectations, my emotions, and the final outcome. Over time, these entries begin to reveal patterns that are impossible to spot by relying solely on memory. Analyzing one's own mistakes deserves special attention. Whereas I used to try to forget a failed trade as quickly as possible, I now, on the contrary, revisit it a few days later. Once the emotions have subsided, it becomes much easier to understand exactly what was done correctly and where a different decision should have been made. Over time, I've come to realize one simple thing. Tools alone do not make a person stronger. Two traders can look at the very same chart, use the same levels, and get completely different results. The difference isn't down to the set of functions in the trading platform, but to the ability to interpret what you see correctly and stick to your own rules. That's probably why my approach is becoming simpler with each passing year. I'm no longer searching for the perfect indicator or a one-size-fits-all strategy. Instead, I try to gain a better understanding of market logic, closely observe price behavior, and constantly work on my own discipline. And if someone were to ask me today which tool has proved most valuable throughout my trading career, my answer would probably come as a surprise. It's not a chart, not an indicator, and not even an analytical program. It's experience, because it is experience that allows me to see, within the familiar movements of the market, things that previously went unnoticed.